Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that buyers were dominant and pushed ES a little bit beyond yesterday's high, where responsive sellers have been active. And at this point, heading into the open, we have pre-market resistance at 71.5 to 73.5. How the market responds to that zone is going to help set the tone for the day. The overnight bias has been more bullish, but if we zoom out a bit, we can see that ES recently broke below a 3-day balance area and then a larger time frame multi-day balance area. So that leaves our short-term bias as still relatively bearish. And for that reason, even in the event of a move higher beyond the overnight high, we can still get responsive sellers active at the 75 quarter to 77 quarter initial resistance zone. And in the event of some better momentum and a move higher, we can still get responsive sellers active at the 80 quarter to 82.75 zone. So those are still valid areas of resistance. On the downside, we have pre-market support at 66.5 to 68.5 with the gap right below at 20.66, and a break below that zone would be needed in order to confirm the sellers back in control on the smaller time frames. And then from there, we can get a move into 59.75 to 61.75, which marks the overnight low. And after that, we have better support at 53.5 to 55.5 and larger time frame support at 47 to 49.5. Now on the econ calendar, we have the oil number at 9:30 a.m. Central Time, and then the main catalyst on the day is going to be the FOMC announcement at 1 p.m. followed by the press conference at 1:30 p.m. Central Time. So you want to be careful trading the market around the announcement and even around the press release. And just be very selective. If you are going to take any trades, make sure you're in from good trade location, or just stay out of the market altogether around that time, around the announcement. There can be a lot of short-term volatility where if you're involved in a trade, you can get stopped out and it doesn't really mean much, and then the market can still go in the direction that you were looking for it to go. So just be cautious and careful around the announcement. You know, the first 10 to 15 minutes typically are fairly volatile, and then the markets kind of calm down and put in some better structure, and then they can provide some better opportunities. So the main idea today heading into the open is that even though the buyers have been dominant here in the overnight session, the short-term bias can still remain bearish, and we can still technically fail at 75 quarter to 77 quarter and 80 quarter to 82.75 for a move back down into the 66.5 to 68.5 and possibly even lower. So that's something we'll have to read and determine in real time just to see the level of strength and momentum we're seeing in the market. But in the event that we do fail at the initial resistance zone or even the pre-market resistance zone, you know, we could be seeing a pullback into initial support at 59.75 to 61.75, and in the event of some better momentum on the downside, even a test of the 53.5 to 55.5 would not be out of the question. And then off of the FOMC announcement, if we get some decent selling, that'll be a news-based move. So we have to be careful with that one. But if there is a lot of momentum and there's a lot of volume, then even 47 to 49.5 would not be out of the question. And then at that point in time, responsive buyers can start to step back in. 47 to 49.5 marks larger time frame support, and then we have a major high volume node at 42. So that's really how the market is set up at this point heading into the open. We are going to be conservative and careful on the long side because it's counter to the short-term bias. And as long as we're getting good trade location, we can focus on shorts, especially at initial resistance and the 80 quarter to 82.75. So those are our main thoughts heading into the open. Let's see if the sell side can maintain the short-term control, and we'll take it from there.